Still running. Yo, yo, yo. Welcome back to the channel. Long time no see. I know. You can save all the praise. I know you've missed me. Uh, uh, it's been a crazy couple weeks. I'm not gonna lie. I'm setting up here. Kind of got a big deal going on for next week that I'm preparing for. Outside of the markets and the YouTubes and the Twitters and stuff like that. So I've kind of been like using all my brain waves towards that. And currently I'm doing some late night work on it. So, but I'm taking a little break. Figured I would have a sip of bourbon with you and go over what I'm seeing in the charts. Let me take a sip right quick. It's looking delicious. I haven't even had a try yet tonight. I know I was supposed to smell it first. I got nervous because of the camera. But yeah, so I just wanted to talk about what I'm seeing, what I think is going to be happening. You can kind of see already here some of my thoughts on SPY. And so what I'm thinking is, remember whenever we first had this breakdown here and we started to have this rounding bottom, I was calling for this. So first of all, we called the bottom like price target of this move because remember we were talking about how, I know it's really noisy here, but remember we were talking about how we were looking for like our bearish price targets were going to be between this range. So 379 to 366 range because it aligns with the Fibonacci retracements. The 0.5 and the 0.707 are the most key retracement zones. Obviously, you have the golden pocket in the middle of there, but historically, like in the past few months, SPY has really respected those Fibonacci's a lot more, a 50% retracement and the 0.707 retracement. Since then, fortunately, because I've been so busy, I guess that the market has been considerate of me and has decided to go absolutely ridiculously sideways. I just heard a door open. I'm wondering if my son is awake. I might be finding out here shortly. No, that is my fiance. Hey, babe. By the bench in the room. Love you more. Yeah, so I'm not going to reshoot the video. We're going to keep that in there. And so yeah, so we've had this absolutely brutal sideways trading range. Let me change this to white. Oh my goodness. I'm a little knocked off of my zone here. She's so beautiful. It wasn't as much of a joke. Well, really, I mean, you can put the lines here, right? I mean, you're essentially just trading within this this Fibonacci range, 382 to 0.5. I do see this as I'm still seeing accumulation here, but more locally here, I'm seeing this as a redistribution, which is really not a redistribution, but a distribution, which is really interesting because what I think is being set up here, and I've talked about this on Twitter a little bit, is the potential for a spring action down here to this 618 zone, and then having a run up afterwards. And it doesn't necessarily have to be all the way back up to the macro downtrend, but somewhere in this range, you'll see in a second, again, targeting the 0.5, probably bearish in this instance, very bearish, all the way up to the 707, which I think is the least likely scenario because the 707 would then be breaking the macro downtrend as we have it drawn here. And I know that it's not fitting for the big CPI print that you had. I mean, as a matter of fact, let's draw that and see. Ooh, yeah. So, I mean, maybe if it happens a little bit earlier, you you touch that. That would be a really interesting way for it to play out. But I am seeing this sort of fake out and then a move up, similar to what you saw back here, really. This sort of price action back here, where you had this like big drop off. I know next week we're having market events. The numbers came out like yesterday. Like the market pumped all day before they came out, just so they could dump and then keep you in the same range. I do think that you're going to see, in my opinion, a fake out to the downside, followed by a move to the upside, somewhere between this 392 to 400 range, pretty much. And then I do think that ultimately that will behave as redistribution. And you will get rejected down, and you will make lower lows eventually. And that could take some time. It could be March, June, September. It's a little bit harder to time up that side of it. But the reason that I believe this is because more importantly than where SPY is necessarily, you look at the macro chart of big players like Apple. Like Apple still hasn't seen a very major retracement relative to the price action that you've seen on SPY. It's actually, let's see here. So from all-time highs, okay, that is not what I wanted to do. From all-time highs to here, you've seen 31% on an individual stock, when SPY has seen a maximum of 27%. That's pretty. It's actually amazing how well that Apple has held up to this point, in my opinion. And you can see, we've talked about it already on the channel, that you've had this distributive structure sort of playing out. You have this big downtrend that you're respecting now, and you're a long way from all-time highs on Apple, in my opinion. I don't think you're anywhere near that. What I think is possible, though, is that since SPY pumps, you actually see this turn into a fake out, and then you see a run up back to this downtrend before breaking here, and then ultimately having a big dump to the downside. And then this is when you're going to get that Tesla, like we saw in Tesla recently, that sort of, really steep downward move that happened on Tesla once it broke through its key levels, which we've already seen Apple do, like this. That's when you really see it play out, right? Actually, this is a really good trend line to be watching to correlate with all of this move if you look at it that way. And the same thing can be said. So my long-term price target for Apple is in the $80 range. I think it's 82. Yeah, so like $82 to $85. I'm thinking by the end of the year, it's going to be more slow than Tesla is, just because there's so much, it's so much more impactful. I don't really see it having this big major drop because there's so much more tied into it than Tesla. Tesla is just a lot of retail pumping, like kind of just letting retail pump it. Microsoft, the same thing. You're sitting on top of this liquidity level. You haven't broken your key range yet, which is the 213 to 219. There is that room, right? There's that room for upside back to this downtrend before you ultimately make lower lows. And then that is kind of in the same time frame that we're talking about. Tesla, I'm still not optimistic on Tesla. I think you can still push up on Tesla short term to this 140-ish range or something, but I do think that ultimately you're still going to continue down to at least $65. Once you break through $90, there's basically no support until $65. That could happen in a week, in my opinion, once you break $90. You could see it move down to 65, and then maybe it gets range bound for a little while before it continues down to like 50. And then like really optimistic bearish target would be like $25 on that one. I'm not just like pulling numbers out of my butt, by the way. They're all Fibonacci levels, so $25 on the 786. And then this the golden pocket here is $41 to $46. Remember, we look at the 0.5 to the 707 on SPY because that's what that one respects. Every stock, every ticker has its own personality. QQQ has this macro uptrend. Oh, by the way, on Apple too, this green line that you see here, I know that I've mentioned it already on the channel, but this green line here is a macro uptrend that is all the way from 2003. You had touches here in 2019 and 2020 for the COVID collapse. You actually just broke, excuse me, just broke this macro uptrend. You haven't really confirmed below it, in my opinion, yet, but you're definitely teetering on the edge of it. Not in the best spot. You could reclaim it, have a big rally. Normally, if you reclaim an uptrend in that way, that's going to be a big rally. So that could align with the thesis that we have here before you ultimately break it. QQQ, macro uptrend from 08 bottom, touching in 2020 bottom. You just broke that. You're trading below it right now. So basically what I'm saying is right now you kind of have this space where you can see a temporary relief bounce. But ultimately, I do think that you're going to go down to lower levels on the indexes as well as with these individuals. To be honest with you, individuals have been a lot more fun to play recently, and they might be more fun to play in this big downturn. It's just better to watch SPY for the channel's purposes, in my opinion. I don't know. Tell me what you think. I mean, do you prefer individual stocks or SPY and QQQ? But I feel like looking at SPY, it'll help you contextualize whatever ticker you're looking at personally a little bit better. Excuse me. I'm out of breath. I'm talking too much. Bulking, dude. I've been eating a lot lately. So maybe I'm a little full. But anyway, that's pretty much the video. It's really hot in here too. That's pretty much where I stand on things. So I guess to summarize, it's not so much the SPY chart that's so incredibly bearish to me. It's the context that's like around the SPY chart. The SPY chart is one picture, but the bigger picture to me is a much more grim picture, which is the underlying charts that are fit within the S&P 500 that are giving me this more grim outlook, because to me they seem very obviously bearish and literally sitting on the precipice of a big move down. And I don't see an optimistic way. I don't see an optimistic way to look at Apple's chart. Like, the most optimistic thing is, you have a rally all the way back up to this downtrend here. But even then, you would have to break this to then, this is just such an unlikely, this is such a distributive move. You have the classic, just this, everything is really McDonald's archy, right? Here's an accumulation here, but then another McDonald's arch. This is just so distributive to me. It seems like they're just holding price unnaturally high, distributing shares until they're happy with the distribution, and then they're going to eventually dump it all over everybody's face. But that's just my opinion. That's how I see it. And yeah, that's where I'm going to end the video. So have a good night. I'm going to get back to work here, get some things done, and be safe out there, all right? That was Chevelle, by the way, at the beginning of the video. The song is Still Running by Chevelle. Classic album. Vitamin. Is it Vitamin R? No. Oh, no, it's This Type of Thinking Could Do Us In is the name of the album. So make sure you check that out. It's from like 2004 or something like that. I was like 12 years old, but I used to love that album. Vitamin R was the hit single off of it. All right. Have a good one. Peace.